Good evening, everyone. It is an evening for your beverage of choice if you own stocks or the funds that invest in them. Japan, Europe, here, everywhere you turned, investors were selling shares today. At one point, the Russell 2000 index of smaller U.S. stocks dipped into correction territory, off 10% from its recent highs. Now, like the other major U.S. indexes today, it did manage to end off its lows, but there was plenty of damage nonetheless. Just 2 days after closing at an all-time high, the Dow fell 167 points, making for a two-day loss of nearly 1.75%. The Nasdaq was down 31 today, and the S&P ended lower by 17, about 1%. Now, what's worrisome is how swiftly sentiment has changed. The Dow component Walmart's earnings and outlook cast doubt on the health of the American consumer. Today's economic data were mixed. Jobless claims fell to a 7-year low, and a key regional manufacturing measure hit a 4-year high. But overall industrial output was off last month, and so was home builder confidence. And then there was the commentary factor. Technical analyst Ralph Acampora told CNBC he had a, quote, sick feeling that smaller stocks could fall 25% soon. Meanwhile, in Las Vegas, influential hedge fund investor David Tepper told an investment conference that he was worried stock prices were stretched and warned investors not to be strongly long the market. Maybe what's said in Vegas should have stayed in Vegas. Dominic Chu has our report.
If you look at the markets right now.
So, why all the fuss over David Tepper's comments? Well, let's just say he's got a history of making market-moving calls. Back in September 2010, Tepper's first appearance on CNBC, he said the Fed's stimulus program is a signal to get aggressive.
The Fed's going to come in with QE, right? Then what's going to do well? Everything in the near term. Everything. So what do? I got to buy. I can't take the chance of not being a little bit longer now. That's not means I'm going, to the walls. Can you say that?
He said it, and what followed became known as the Tepper rally, a 14% bump in the S&P 500 during the next 6 months.
I'm the animal at the head of the pack. And like I said, I either get eaten or I get the good grass.
Tepper was at it again last May, talking about the Fed winding down its stimulus program or the long-awaited taper.
If there's a true taper, there better be a true taper. Or else you're back into the last half. I think you might be in the last half of 99. And so, like guys that are short, they better have a shovel to get themselves out of the grave.
The market ran to new highs right after that, then stalled for a bit. But over the next 6 months, the S&P 500 was up a little more than 8%. And just last night at the SALT conference in Las Vegas, Tepper told investors, don't be too freaking long right now. Once again today, the market responded with a sell-off. Advisors often like to warn that the past is no indicator of future performance. But one thing seems to be certain. When David Tepper speaks, the market listens. For Nightly Business Report, I'm Dominic Chu.